Well, when the Fed looks at the health of the economy, one of its metrics we know is a 2% annualized rate of inflation. Right now, we're basically half that number. But what if the main concern should be falling prices and not rising, also known as the dreaded deflation? Let's bring in Mark Zinder. He is the former national spokesman for Franklin Templeton and is president of his firm, Mark Zinder and Associates. Mark, thank you so much for being here.
Ashley, thank you.
That's a good point. Is the fear of deflation still very much out there?
Oh, very much. As a matter of fact, the 1.1 that you just mentioned is actually CPI, but the Fed likes to use PCE, which is personal consumption expenditure price deflation.
Right.
And it's showing last month was 0, and the year-over-year is 0.8. Take out the West Coast, deflation.
So are we going down the same rabbit hole as the Japanese?
I don't know about that, but the way we need to look at it is deflation, is it as bad as we assume, or is deflation could it be good?
So is the Fed out of tools? I mean, does it come down to fiscal policy getting us out of this?
I think the next thing is fiscal policy, but what's the Fed's next move? Is it raising rates? Do they lower rates?
We have slow growth. We have too low inflation. That's not exactly the best environment to be raising rates in, is it?
I don't think so. And if you look at other countries, Japan, Denmark, European countries, they're lowering rates. They're going negative. Do we go negative?
Well, I was going to ask you that. Do we? I can't imagine it, but because that's a slippery slope right there, is it not?
Well, it is indeed, but the Fed's prepared for it. And they couldn't do it in 2008 because of legal reasons. They couldn't do it because they were concerned that the money market funds would break a buck.
Right.
And so now they've put all this in place. And Janet Yellen said just recently, we're prepared for the next adverse scenario. We're prepared to go negative.
So from a market point of view, today we're seeing this somewhat relief rally, if you like, 2 days in a row, up very nicely, thanks to the Fed.
Right.
I mean, how long does this go on? And how do you play it as an investor?
Well, that's a very good question, because you can't go back over to the 5,000 years of monetary policy and say, oh, the last time they went negative, we should have done this, right? But you can look at the countries that have gone negative and say, okay, what investments have done well in those countries? Maybe we should think about that in our country as well.
So what do you like?
Real estate does well in a negative
Real
interest rate
estate
environment. Fixed income, bonds would do well. You know, we're all concerned about bonds because the Fed may go up on the Fed funds rate, and their initial move will probably be up.
So if I take your advice, how do I play the real estate game? What's the best instrument to invest in?
Oh, I'd do it through REITs.
Through REITs, real estate investment trusts.
Absolutely.
That's the way to go.
I would do it.
We've seen a lot of money sitting on the sidelines still. Do you think this is a kind of somewhat of a technical player's game right now, and for investors just kind of sit and wait, and you know, the fear that this market is just so overpriced that it's due for a big correction?
I work for John Templeton. I'm fundamental, right? So I don't look at the technicals.
There's nothing fundamental about this market.
but what I learned was they would look at, Michael Price taught me how to manage money on a single piece of paper. And what he would look at is price to book.
Okay.
Now, historically, price to book has been 2.75 times book. Overvalued would be 5 times book. Right now, we're at 2.89 times book.
So not that bad.
Not overvalued.
So despite all the efforts, all the cheap money of the Fed, we're okay.
I think we're okay.
Interesting. Should the Fed raise rates in December based on the sluggish economy up to now?
Not with deflation looming. I don't see. The Fed would raise rates if only there was concern of inflation. I don't see the concern.
All right. Fascinating stuff. Mark Zinder, Zinder and Associates, thank you so much for being here. He's here from Nashville. We both love Nashville. We both lived there at the same time. Just there you go.